I can see us now. So welcome everybody to Facebook Live Q&A for OpenCorp, the first for 2021. I just have to get my audio sorted because I'm getting a very strong feedback here on my line. This is my first day as hosting, so bear with me. All right, excellent. So my first gaffe for the day. Hopefully that doesn't mean I don't get invited back, but welcome. I'm here with Nat Ravineski, who's been a relationship manager with OpenCorp for the last 5 years. Nat, it's great to see you.
Thank you. Thanks for having me on with you.
No, that's okay. I know I was thinking about it before. We probably email or call almost on a daily basis during the week, but we never actually get the chance to catch up and chew the fat for 45 minutes to an hour. So this is going to be a good opportunity to have a chat.
Yeah, definitely.
Excellent. Now, I guess a couple of quick things. Anybody who's watched the last few Facebook Lives will notice that I've got a bit of a different background today. I actually used the summer break to relocate from downtown Melbourne to uptown Brisbane with my family, like about 4 million other people, it seems. So we're in a new property up here in Brisbane, and we don't have quite the same spacious living room set up that's free of noise as we did in Melbourne. So that's why it's a bit of a different scene. And I believe you also moved during COVID, is that right, Ben?
Yeah, I did. I ended up moving house during COVID. So I moved from a small apartment into a house. So I actually have an office and I can shut the door. So it was a big change that I wanted to do, and did it just before Melbourne went into stage 4 lockdown. So I was very lucky.
Excellent. And is that something that you imagined doing like a year earlier, or was it kind of something that came about as a result of COVID?
Yeah, I wanted to do it for a long time and hadn't. And I think when COVID hit, I needed a change. And because I was stuck in a small apartment and sort of working from my lounge room, it just pushed me to hurry up and move into a house.
I think that's been the case even for us as well. We were looking at Brisbane for a long time. Obviously, from business perspective, it was also beneficial to have a director up here. But it's kind of something that for 4 or 5 years we kept pushing back. And it was during our stage 4 lockdown, I think it was about August, where we just said, you know what, let's just do it. The kids would have spent most of the year at school if we're in Brisbane now. And we just kind of made it happen. But it's an interesting thing because we didn't know when we would get out of lockdown. So we actually secured a rental up here in November to make sure we could get our kids into a property. I knew that Christmas is often a really busy time for trying to find property because there's a lot of people do move into state over Christmas. So we tried to get that out of the way earlier. We weren't sure when we'd be able to sell our house in Melbourne. So I guess that was a kind of a really interesting process to go through. And I guess one of the things that we found out while we were doing that process was that all of the freight companies were just rushed off their feet, bringing things up to Brisbane without obviously as much going back the other way. So it's, I guess, with border closures and obviously international border closures, that's having an impact, which I can talk about because I know that's a question that seems to come up a lot. But also with state borders and the way that different states have handled the pandemic, that's actually starting to have an impact as well on vacancy rates in different cities and housing markets in those cities. But I'll talk about that a little bit later. There is a question that's come through, and I'll jump into that in a minute. But I guess just to help everyone get to know you a little bit better, Nat, I thought I'd ask if you could just maybe give a quick overview of the role that you guys do in relationship management. And I know it's one of the most important roles within the OpenCorp group, and certainly I guess in helping customers through what might otherwise be a bit of a stressful process. So do you want to give us an overview?
Yeah, sure. So there's myself and Stacey Williams, who are relationship managers at OpenCorp. Our role is to hold the hands of the client through the whole process. So once they speak to either Costa or Michael, and decide that they want to purchase a property. Stacey and I's role is to work with them and their broker, make sure that finance deadlines are being met. And if there's any extensions required, that's what we do. We work with the solicitors to ensure that settlement goes through. And then our main role is construction. So we manage the builders to ensure that they're, managing the schedule as well as they can. We'll get the information and then feed that out to our clients. We send you the nice photos and then the invoicing and work with your broker to ensure those payments are made. And then once the property is completed, we introduce you to property management. And then if you go through the process again, you'll get us again. So, so we're sort of the big part of the investment journey because we're sort of there from finance right through to settlement until your house is completed.
Yeah, excellent. And I guess some of the challenges that you might have experienced through COVID, obviously it threw a lot of people into turmoil, no doubt. There was a lot of phone calls, but what were some of the things in your space that you encountered?
Yeah, sure. So one thing was getting used to working from home, which was a challenge for everyone, but we ended up doing it. We're very lucky that we had some really good technology. We could see all our staff face-to-face still. I think some of the challenges were, especially in Victoria, was trying to keep updated with the COVID restrictions. Obviously, the builders got affected where they had less people on site and just trying to manage their stress of ensuring that things were still being delivered on time. We probably got a real influx of calls with clients feeling like, what is happening? Everyone was confused with what was going on with COVID. It was very hard to understand what was happening with construction. We were very lucky that construction still continued. Probably we did get a massive influx of calls with clients worried that the build was just going to completely stop. What does that mean for them? And just, is their build running on schedule? So that was probably the biggest thing for us. I know property management also got slammed with lots of calls with what's going on with tenants and owners' rights and things. But yeah, I think at the very start of COVID and during, especially with Victoria, there was a huge amount of focus on what's happening, what rules are changing, and just trying to keep everyone updated.
Yeah, and I think with the property management, there was such a big increase in inquiries from tenants and landlords that we ended up, I think, my understanding was that we actually increased the number of people available to answer phone calls in property management by about 50%. But
yep.
You also had a lot of calls coming through your end. And I guess just putting in perspective, you mentioned obviously with the challenges for builders being on site and having their COVID safe plans. How many builds actually ended up getting delayed through that period?
Yeah, so we were pretty lucky. There was probably about 4 builds overall that got delayed, which was quite surprising because we kind of thought it would be a lot more. We had kind of, sort of forecasted, well, this could really go, quite pear-shaped and people could be really delayed. And obviously we have the build guarantee in place, which protects our clients if the build did go over time. So at the moment, we've probably got about 160 to 170 active clients. And so if you look at that overall and 4 builds behind, it's pretty good. The builders worked pretty hard to deliver products as soon as they could.
Yeah, I bet. And that must have been a good relief to those clients as well, knowing that build guarantee was there.
Yeah, definitely. So it is a relief for them that they're still getting some kind of income if it has gone over time. Massive relief. And that's one thing, that's probably a question that Stacey and I got asked a lot, was how the build guarantee worked, because obviously, especially people building in Vic were a little concerned and wanted to know how it all works in case it did run over time, because there was a spot there where everyone kind of thought construction was going to completely shut down. So,
yeah. I believe that one of the construction managers for a builder got sent home by the police one day because they said, "Oh, you've been to 3 sites already today." I think he spent 5 minutes at each of those sites.
Yep.
And then they said, "That's too many. You got to go home." So yeah, it would have been tough juggling all of that and keeping them on track.
Yeah, it was. But yeah, I was very surprised that he got sent home from the police just doing his job. But I suppose they were doing the right thing. But yeah, I think overall, yeah, they did really good. And they should be pretty proud of themselves that they coped with, because change was changing every 5 minutes for a second there. So yeah, no, it was good.
Okay, great. And I see some questions coming through, and I'm going to get to those. I'm just really enjoying this chat with Nat for now. So I'm going to ask a couple more questions.
Sure.
And you've touched on a few of these things, but I guess I wanted to know what are some of the things that surprise the clients? Because I guess dealing with like having somebody holding your hand through a process isn't usual when you're buying a product. You're often kind of thrown all over the place. But obviously at OpenCorp, once somebody decides to proceed and they've met with their investment consultant, say, "Yep, let's do this," then they get somebody like yourself and Stacey, who are absolutely focused on making the journey as easy as possible for them. But what's the feedback you get?
Yeah, I think most clients are very surprised of how easy it's for them, and it's stress-free. They don't have to worry about checking on the build every 5 minutes, or if there is an issue, we're in there to fix it for them. And we don't really need to have them that involved because we're sorting it out in the background. I think that's a massive relief for a lot of clients. They don't have to deal with the builder directly. So they're not having to chase the builder to get the information. We're doing that on their behalf and ensuring that, we're, on their back to deliver as close to their schedule as possible. Yeah, so I think that, a lot of feedback we get is, "Oh, that was great. That was really easy. I'm quite surprised on how easy it was." A lot of clients are surprised on how quick the build schedules can go in most builds as well. So yeah, I think that's a lot of the big surprise. And I think clients get a big kick out of receiving photos to go along with their invoicing as well. So they get at each stage, 4 or 5 photos if the stage is big, so they can slowly see the progression of their house. And as most clients may not live in the same state, and during COVID you can't see your property, you can't fly in a state, it's a big thing for them that they can actually see the progress. So see their house transforming into what ends up being a product that they eventually have renters in. So
and families living in. And I think that's like one of the really interesting things, isn't it? That their feedback is often how easy it is, and they probably see it going really smoothly. And it's like, I have this image of a duck swimming down the creek where it looks really smooth, but under the water their legs are going frantically. And that's, I guess, I know the activity that happens in your space, that you project the air of calm to the customers, or it's just going, but you're weekly on the phone to builders and making sure that they're staying on program. So cool. Now I guess something personal. What do you find the most rewarding? I've asked for what's the customer's feedback, but what do you love about your job?
Yeah, I think, well, I've been in the job for 5 years almost and been a relationship manager that whole time. I think the most rewarding thing is like helping people build a dream. Like their dream is to invest and retire eventually with a portfolio of properties. So I think that's the thrill of my job, helping someone live their dream or their hard work. I had a client this week that had been wanting to purchase with us for a few years and eventually can do it. And just the excitement in his voice actually working with OpenCorp, I think they're the things that give me a thrill and make me enjoy my job. Yeah.
Awesome. I think that's something that we all share in the business is that passion for helping people, and that's the rewarding part. And I get to go. Obviously, we get to go to the customer days where we get all of the customers together, and like whether it's family days or the drinks events, and and information evenings for market updates. But I just love getting that feedback from the customers. I don't get to talk to the customers all that often. My team generally like hidden away staring at Excel spreadsheets and looking at charts. But when we do get to talk to customers, it's so rewarding hearing their journey, seeing the energy and enthusiasm they have for growing their wealth as well. Now I'm going to jump into the questions. So howdy everyone who's joined us. Obviously we're talking to Nat Revanesky today, who's one of the relationship managers at OpenCorp. I've got a question here. Is Melbourne still an okay place to invest in residential, risk averse and want a safer bet? Now, if you've followed us for a while, you'll know that we don't always. It's not just about a capital city, or it's not just about the city. The city is important. So when we look at our investment strategy, it's market area property. Which market do we want to be in? That's which capital city do we want to be in? Then which area within that capital city? Now, there's a lot of really strong fundamentals that still work in Melbourne's favour, but they're not uniform across the city. And right now, that's probably more pronounced than ever. Vacancy rates for CBD right now, which has obviously been really heavily affected by COVID, are through the roof. That pretty much happened overnight back in April, and they've remained escalated or elevated. And that's because a lot of the overseas migration comes through student accommodation, and I guess temporary visa holders tend to live in higher density housing closer to the city. So they're obviously experiencing a lot more vacancies in that space. Now, in the various growth areas, we're seeing vacancy rates ticking up. Some of those markets already had a high vacancy rate, even when Melbourne's vacancy rate was sitting at about 2%. Some of the growth areas, like in the west, was higher. What we've seen is obviously pockets like the eastern suburbs been performing really well, and the inner suburban markets, where there was kind of constrained supply for most of last year, now starting to see really solid results. And again, I can just give a quick bit of personal feedback on that one. Our property is going to auction in a couple of weeks. It's had 143 groups through. In fact, there was 150 people in 65 groups on one day. Now that's because there's a lot of pent-up demand, and that's the story that's consistent across a lot of properties around Melbourne that are going to auction now. So we're expecting there to be pretty solid price growth this year to Melbourne's median off the back of that pent-up demand. But we also need to balance that expectation of price growth with, first of all, where it's happening, and secondly, what's happening with rents and vacancy rates. So if vacancy rates are going up, that's going to mean that in the next couple of years, there may be less first home buyers popping out of the rental market because rents will stay depressed for longer. So it may be easier for tenants to continue to just stay in rental properties rather than joining the home buyer market. That being said, as I noted, eastern suburbs is very, very strong. Southeastern suburbs is still strong with a vacancy rate of around 1.5%. So that's better than the Melbourne market's average vacancy rate from 12 to 18 months ago. So those markets are doing very well. Some of the other markets have been creeping up with that vacancy rate, as I noted. Now, in terms of being risk averse and wanting a safe bet, as I noted, there's still very good fundamentals for Melbourne. We're also seeing probably other markets being at a different part of the cycle right now. Perth had a depressed market for about 6 or 7 years, from 2014 through to, was probably ready to start picking up last year, but then got held back a little bit by the onset of COVID. Now we're seeing the underbuilding that's occurred for that 7-year period starting to come through, with their vacancy rate actually being below 1%. And even their CBD market, which had a vacancy rate of about 6% 3 months ago, that's now back down as well to, I think it was around 3%. I looked at that a couple of weeks ago, so I'm a bit rusty on that data, but I believe it's around 3%. Similarly with Brisbane, their market sort of stagnated for a couple of years, and its vacancy rate, because of less construction happening for a number of years, is now also creeping down. So it's trending down. It's now at 1.5%. And if it continues on the same trajectory, it'll hit 1% by the end of this year. And that's obviously if there's not a very rapid increase in construction activity to kind of offset that. And the reason it's being driven down is because of people like myself who are moving up from Melbourne as well. So there are obviously some really good fundamentals in various different capital cities. I think the overall trend has been towards tightening vacancy rates. Now that Melbourne's out of stage 4 lockdown, we saw that vacancy rates peaked across the metropolitan region late last year, and it's starting to trend down again now. Similarly with Sydney, they had a very high vacancy rate through middle of last year, and that's been trending down. Now it's sitting at about 3.2%, which is in line with where it was pre-COVID. So that's probably a bit of a picture on, I guess, where the capital cities are. In terms of whether it's a good place to invest, that is also a personal thing, depending on what properties you already own. If you're very heavy in Melbourne already, then it makes sense to look at another market. If you've got property in Perth and Brisbane, then you may look at Melbourne in one of the suburban markets that's still performing well and has much tighter stock. So yeah, obviously the best thing to do if that's something that you're looking to do and you're building your portfolio is to obviously chat to us. We can work out your borrowing capacity. We can look at where your portfolio existing properties are, and then we can work out where's the best place to invest. And that's obviously my team in the background is the where to invest side of things, and we like to do that once we know a buyer's personal circumstances, as opposed to just throwing darts at a dartboard as some groups might do. We want to make sure it's tailored to your needs and not just about the property, it's also about your circumstances. I've got another question here from Abby. Hi, Abby. What are the best investor resources to help one narrow down the best city suburb to invest in for future growth, in addition to earning a good rental return? So I think I've covered probably a little bit of that in terms of the things that we look at. There's a lot more. We're also looking at employment statistics. We're looking at housing starts, because we have to project what the housing supply will be in the future, not just what it is now. That's probably one of the things that most people will go and look at, the CoreLogic statistics, and see what's happened with the median house price and how much it went up or down in the last week or month, and try to use that as an indicator of which markets or which suburbs might be good performers. But the reality is that's the past. That doesn't tell you what's going to happen in the future. And the future, I guess, performance of property markets is going to be driven by three things: supply, demand, and affordability. Affordability driven by wages. Affordability is driven by interest rates. So obviously that's a bit of a combination of wages and interest rates will help you to determine what people can pay. And obviously supply is driven by housing starts, housing approvals, where stock might be held. And finally, demand. That's obviously a question of migration, of demographics and things like that. There are some great resources. SQM Research have some good stuff on vacancy rates. CoreLogic also have some really good things on house prices. If you really want to, I guess, do your homework properly, then you've got to start getting into the Australian Bureau of Statistics to find housing starts, to find finance commitments, to look at the unemployment data. And then if you want to kind of continue, then looking at RP Data, which is a paid subscription, where they get information on property sales from real estate agents and the Governor General or Governor General's office. Sorry, Valuer General's office, not Governor General, which obviously gets aggregated. And then you can also look on a property by property basis. There's no end to research. It keeps us very busy, but I know that there are lots of people who love numbers like I do, and who like to get into that stuff. So hopefully that's covered your question, Abby, and hasn't scared you off doing some research on your own. All right, next one from Michael. Thanks for your question, Michael. And sorry, Nat, I know I've been talking at the screen a lot for the last 10 minutes, but I do love this stuff, and the questions are probably right up my alley.
Yeah.
Would love to secure a second property through OpenCorp. We have our first for you guys. Nat was fantastic.
Oh, thanks.
Sorry, that's not a question. That's just That's just a great pump up there for you, Nat.
Thanks.
Let's talk real estate post-pandemic rebound for Brisbane. Okay. So again, you'd have a lot of clients that have got properties in Brisbane at the moment as well.
Yeah.
Like what's the general mood from the clients, or what questions do you get at the moment from the clients around Brisbane?
Pretty much how the Brisbane booming. They've been very lucky. They haven't really been in any lockdown, and as you said, a lot of people are migrating. So, so the Brisbane market is going crazy. People just wanting to know, are people like migrating up there? Is the vacancy rate a big thing? Properties sitting there vacant for a while? No, they're not. So I was speaking to property management the other day, and they had 150 inquiries on one property. So there are a lot of people waiting to get into areas up in Brisbane, either just to relocate with work, or a lot of people are working remotely now, and because they're pretty much mask free and able to do whatever they like, a lot of people moved up there. And talking to one of our builders, Ausbuild, they said during the pandemic they were as busy as ever. So
yeah, it's amazing what confidence does to a city and the property market as well. But I think it kind of Brisbane turned the corner around June.
Yeah.
And obviously that was when the home builder campaign kicked off, or home builder scheme from the federal government. And I know a lot of land developers all of a sudden saw this huge increase in their land sales. And talking to my contacts up here at the time, I guess a common story was that people who weren't even thinking about buying a property 3 months earlier had already all of a sudden decided, because their parents said, "Hey, you're nuts if you don't take advantage of this," and they'd come forward and they started doing their homework. And I think that was obviously a really good thing, not just for the Brisbane market, but nationally. That helped to restore some confidence to buyers. But something we've seen, I guess, through lots of historical turbulence, is that when interest rates drop, when government stimulus comes in, that kind of has a really positive impact on the housing market. It's kind of what it's designed for. And the government, the Reserve Bank, and APRA are all heavily focused on making sure there's price stability so the price don't drop, but also that there's consistent, steady growth, not over the top, but just consistent, because that helps people to, I guess, create equity, which gives clearance over the debt of the country. That's really technical stuff. Anyway, coming back to Brisbane, so that confidence kind of got the ball rolling and built some momentum. Now we're seeing there's huge demand coming through the established housing market. Brisbane's also been going through a bit of a renovation boom in the last couple of years. While there weren't a lot of property transactions, a lot of the older suburbs were starting to get into, and it's almost like Melbourne's like block obsession with the block, where people in Brisbane now are engaging really some great architects up here that are redesigning Queenslanders in a modern way. Now, why is that important? Because if somebody buys a house and then they spend hundreds of thousands of dollars renovating it, that house has now gone up considerably in value. If they then sell that, that's lifting the median house price by the additional value that they've created in that property. So the more of those houses and the more of those renovations that occur, that's lifting the property. So that's one thing driving Brisbane's housing market and some of the price growth we're just starting to see. At the other end of the scale, as you've touched on, there's a lot of demand for rental accommodation. Now, rents aren't going up much at the moment on existing tenanted properties, and that's because there was a moratorium on putting rents up and on evicting tenants. So that makes it pretty tough for landlords to boost their rent. Now, for the last year, most people have been very happy to just have the rent paid and obviously be able to hold their properties, which has been great. And I think, again, probably just something that we saw through COVID. I think was it 98% of our properties had no impact on rents at all. So so that's been great, and not necessarily consistent across the whole Australian rental market, but certainly in a lot of those housing markets has been. So rents are a little bit stagnant. However, when that moratorium comes off, it's highly likely that there will be an increase in rents. Now, what happens when rents go up? I touched on it earlier. Tenants start thinking, well, maybe I should look at buying, because if I'm going to be paying more rent for the next 6 months, and in 6 months' time they're going to put the rent up again, it's not long before I can't afford the rent, and interest rates are low. So I'm going to start making more of an effort to save while I can before the rent's gone up too much and I can't save, and then they're looking to buy. So again, that brings more people into the property market. So we've got more competition for rentals. We've got potential new entrants into the housing market, and we've obviously got people moving up from interstate, which, while some will rent, like myself, and then buy shortly thereafter, those extra buyers are coming from markets where the median house price is 30% higher. So on a like-for-like basis, they can really boost the price. And there's a lot of agents I've spoken to in the inner urban areas who have been receiving offers from people in Sydney and Melbourne who never walked through the property at all. They just saw the listing, made some inquiries, sent somebody else through with a phone, and made an offer that was well above what others in the market were prepared to pay. So I guess those things all bode well for Brisbane. Probably one other thing, I've talked about supply and demand. I've talked about demand, at least. Supply, it's very hard to increase supply overnight for a market like Brisbane. They've got lots of different growth areas. Some of them are becoming exhausted now, as in they're running out of land. So the northern suburbs of Brisbane, a lot of the infill pockets have now been sort of developed, so there's not much left. Similar with the east, the inner south, the inner west. So it's kind of pushing people a lot further out now as well for new land. There are still some pockets but they're very hard to find, and they're very small supply that comes through there. So that's also one of those things that means that it's harder for them to meet demand with supply. And the last thing to touch on was affordability, which I mentioned earlier is a combination of interest rates and earnings, wages. So interest rates are at record lows. They're going to stay low for a while. The Reserve Bank said they'll stay low until we get to full employment, which is sub 5%. I think we're at 6.6 at the moment. So it's going to be a couple of years with interest rates down at this level. But then we look at earnings. So what surprised a lot of people, that while Brisbane's a much smaller city than Melbourne, wages are actually on par with Melbourne on average. So the average wage for somebody living here is the same Melbourne, which means we pay the same interest rates. People in Brisbane earn roughly the same wages as their counterparts in Melbourne. They should be able to afford to buy the same value of house. So Brisbane's median house price is around the mid 500s, and Melbourne's is the high 800s. That's a huge difference. That's like 70, 80% difference potentially. So what is it that creates that difference? And it's the perception of value. So if Brisbane's price went up 60 or 70% overnight, people would have a heart attack. Valuers would say, there's no way, no, that's not the right value. And they would end up having to crash the contracts. So the value is going to have to creep up gradually. And because Brisbane doesn't have an auction market like Melbourne or like Sydney, prices don't get reset every week. They get set by an agent. They sit on the market for 3 months until they get a buyer that's prepared to pay the price. Then the agent sets their next client's property price a touch higher. It means that it takes longer for prices to go up. But there is a lot of capacity for price growth in Brisbane. And in 2007, just before the GFC, Brisbane's house price median was actually higher than Melbourne. So I'm not trying to make a prediction that Brisbane's house price will get back up and be above Melbourne's house price, but there's a capacity for that to be the case. Similar with Perth. Perth was right up there above Melbourne back in, I think it was the mid 2000s, around 2007. as well. So I guess that's just something we keep in our mind to think big picture about these cities. It takes a long time for markets to kind of reach their point where they're ready to go up. But certainly all of the signs are positive for Brisbane. And if I kind of take it a little bit more broadly, and I know Michael's question was about Brisbane, but if I talk about Perth as well, again, we're seeing pretty much all of the same signs in Perth as we are in Brisbane. Obviously, Perth is also a market that can be influenced very heavily by the resources sector and infrastructure investment for the resources sector. So that has the tendency to kind of make it a bit spikier in terms of the growth rates. So we see that Perth goes through periods of really strong, rapid price growth generally, and then it goes through periods of sort of 4 to 7 years of kind of very low price growth to stagnation. We've come off that 7-year stagnation period, and we're hitting that price growth. Hopefully it's different this time because it's not being driven by infrastructure investment or the resources sector, which means that if it should be more sustainable. But probably the key thing that we're focusing on for Perth is not an expectation of doubling your money or doubling the price in the next 3 years, as might have been the case in previous booms in Perth. It's more about the rental vacancy rate and rental growth. Rents went up 12% in the December quarter last year off the back of the ultra tight housing market. So obviously, if you're looking to invest in Perth, we're expecting that there should be really strong price growth for the next couple of years, but don't expect that to be, as I said, a doubling, but do expect to see really solid rental growth, which will be great for those holding their portfolios and looking for greater cash flow. Cool, I can probably take a breath there. Sorry if I talked a lot there. There's a lot of words and a lot of detail, and obviously I can get right into it when we're talking stats. I'm interested to know from you, Nat, what are some of the things that really surprised you when you came to join OpenCorp 5 years ago?
Well, it was my first property job. I'd been a banker for a long time. I think what surprised me was probably how many clients we had actually. So we kind of hit the ground running. Relationship manager role was sort of developed 5 years ago when I started. And yeah, it was just, it was a good learning for me. I was a business banker previously, but yeah, probably the amount of clients do come through and the repeat business as well. So you might deal with a client, but you tend to deal with them again and again. So that's a good thing as well. So there's not just the one-off, but there are the people that are one-off buyers, but a lot of the clients are duplicating clients. So we get to chat to them more than your average sort of job where someone will come in, buy something and go. So yeah.
And being in the property sector, what are some things you love about property in general?
Yeah, I just love the sort of difference of things, pricing, how it grows. I think I was very surprised in some of the growth that happened in Melbourne with properties that our clients purchased. So they bought land and there was a huge amount of growth in such a short amount of time. So that interests me as well. And I suppose another thing that interests me that might be a little bit dorky is watching houses transform. So I find that very interesting as well. Just how, they, it's a bit of dirt then turns into a slab and everything else. So, so that's very interesting for me as well.
Yeah, I think, I've probably lived and breathed property for too long at times, and I know that whenever I'm out, if there's an opportunity to talk about property, I kind of get sucked in, even though I feel like I'm also talking work or talking shop, and you try to avoid that. But I guess the thing I love about property is that it's kind of something that so many people, like almost everybody, has an interest in property in some fashion. So it's always something interesting to talk about when it comes to property. But I actually, when I was a teenager, and my dad, obviously, who helped Al and I get into property, and I think because of he was a builder and developer and investor. I think because of that, I always had this really strong interest. I knew I wanted to be involved in property, but I didn't know what I wanted to do. And I went and did work experience at an architect's firm. And I think I'd make a terrible architect, to be honest, after that. But it was, I think because of that sort of stint in architecture, I really love the design component. And I think that's also something that comes through, that it's always this balance between obviously inclusions and visual appearance, and being smart about how space is used in a home. Yeah, I'm always looking for those new and interesting things to incorporate into our houses. So it's great, obviously, being able to work with other people who are similarly passionate about the product and the outcomes. Now, I just remind everybody, keep the questions coming through. Another question I saw pop up, it's disappeared now, but a question I saw was whether all the positive news about Brisbane, whether it's time to go and get a valuation on their properties in Brisbane. I think certainly it's worthwhile. It generally doesn't cost anything to go through that process to get a valuation. As I noted, we're at the start of that upward trajectory, and from a statistical perspective, we've seen a couple of % of growth in the last couple of consecutive quarters for Brisbane, but it's also suburb specific. So I would highly recommend chatting to your senior investment consultant, and we can then have a look at the suburb that your property portfolios are in, and we can look at the median house price growth for those suburbs to see whether there's what the probability is of I guess substantial growth to enable you to then reuse your equity, but also getting it valued for the sake of valuing it. If you don't intend to use that equity, can be a experience that you might want to stave off a little bit longer until you're ready to go again. So I guess it just comes down to those things. If you think you're ready to buy again and use the equity, then absolutely we can go through that process for you. Okay, we're not seeing many more coming through here. I'll give it a couple of minutes to see if anything else comes about. I guess while I'm just in this break, we do have a webinar coming up with Nerida Krinisby, who is going, I think it's the 25th of February, and she's going to be going through the market statistics. If you love the data stuff I talk about, then obviously she's going to probably take it to the next level, providing you with the REA insights. So that's obviously going to be one of the big events that we're trying to arrange more of, to provide really insightful information from industry leaders like Nerida. So yeah, you get to hear it from those closest to the data and closest to the statistics. So I think that's probably it. I haven't had any more questions come through in the last couple of minutes. Nat, it's been awesome to have you on board today and to get a chance to
thank you. No, thank you. Right. Nice to sit down and chat with you.
Yeah, I know it was very short notice as well, because we were going to have Cassie Austin, who obviously runs our property management division, unfortunately due to some technical requirements. But we're obviously we asked Nat to jump on, and at the last minute she said yes. So it's been great. Actually, I've just had a question come through from Daniel. Daniel, thanks for joining us, and sorry you missed the start. What are the rules? What rules are you expecting to change in finance in March? So I can talk macro. Michael Beresford's probably our resident finance process expert, but certainly in terms of the high level, from an interest rate perspective, we're not expecting there to be a substantial change. certainly no change based on the Reserve Bank's, I guess, commentary that they want to help to promote a return to full employment across Australia. Now, in terms of assessment of finance and the proposed relaxation of responsible lending laws, which came in, I think, as a result of the financial review into the banking, or the review into banking and finance sector. I think, and it's just my personal opinion, and I might touch base with Michael and get him to reach out to you, Daniel, and just clarify anything on this. But I would be working on the assumption that it's not going to be a substantial overnight change that's going to result in a big increase to people's borrowing capacity or serviceability. Certainly, they've said that they're going to look at using the income and expense, was it the expense ratio calculator? But that doesn't necessarily mean that banks are going to throw out the entire rule book and just start trying to lend, because they are balancing, I guess, a lot of compliance, and they don't want to create, I guess, a rod for their own back by overheating the housing market. So I'd expect that it's going to be cautiously done. They also don't want to do anything that's going to lead to the same rules being brought back in 6 months' time or a year's time if things do overheat. So we're certainly expecting there to be some more favourable movement. And by more favourable, I mean it's going to favour borrowers a bit better by putting, I guess, a little bit more, I guess, onus back onto the borrower to be able to determine whether they are comfortable with their level of expenses. But yeah, as I said, it's not going to change the landscape overnight. Hopefully that covers it. But as I said, I'll reach out to Michael, ask him to touch base with you, and can give you a little bit more information on that. All right. Another question. If I was going to go through, sorry, Nat. I was premature before in thinking that everyone was done. So it's great to see more questions coming through. If I was going to go through a build process myself, what research would you highly recommend? You deal with the builders on a daily basis. We've got some really good builders that we work with, and we've trained them some of them for over a decade to be able to operate to the systems and reporting that we require. What are some of the things that would stand out to you that, I guess, if you were going out on your own, that you would be worried about in terms of trying to find a builder that you were comfortable with?
Yeah, I think probably making sure you did have the right building company, and that they were reliable. Builders can tend to just do their own thing, and I suppose the difference would be we sort of meet with them regularly and do checks and get updates, and they know that that's going to happen. If you go it on your own, you may not get such big updates. Also, if anything goes wrong, you might not know how to deal with it, and they might sort of tell you something that's not right. So I suppose having an expert sort of dealing with the builders every day is probably a good thing. For example, I had a client where a vapor barrier was burst. It was a few years ago now, and if he'd done that on his own with his own builder, that would have cost him an extra $20,000 on top of his build price. But he was covered with us, and he said, I wouldn't have known what to do or how to handle something like that. And that's not an everyday occurrence, but I suppose sort of understanding the build process, reading up and finding out what the stages are, what's expected in those stages to ensure that they're correct, are probably things that you would need to know and do your research.
Yeah, I reckon that's a really good point as well, Matt, in relation to probably not just the things that can go wrong during building. And we, like during the build, there's obviously a lot that can go wrong. And I mean, and one of the other key things is also like financial capacity of builders, whether they're able to complete a job. While there's homeowners warranties and things like that there to protect the customer and to help to, I guess, get a job complete if a builder wasn't financially able to complete a job that they've contracted to do. There's always still extra costs that don't, like time, there's finance costs when you're paying interest in that down period. So we actually do financial reviews on our builders, or the builders that we work with, to make sure that we're comfortable with them being able to build for our clients. Also, probably one thing, I've used a lot of different builders myself. As I said, my dad's a builder, and one of the things that I'm a big believer on is not going to your mate to build you a house. And this is, I guess, something that there's a few different reasons for this. One, you don't want to end up with in a dispute with a friend. So that's one thing. Two, your friend may think they're doing you a favor by building for you. And therefore, when they're doing you a favor, they might say, oh, I won't even charge my full margin, which is creating a burden for them, but also means that your job is about the bottom of the list, because they're doing you a favor, they'll attend to it when other jobs are kind of dealt with first. Hence the reason why you can end up in disputes with your mates. And yeah, obviously if there's any issues with quality, that's not great. Now, also, obviously, builders are, and this is something that we know firsthand. Builders that are really good at building aren't necessarily good at customer service. Builders that are really good at customer service aren't necessarily really good at building. So it creates a bit of a minefield that you need to work through. And some of our builders that we work with, when we partnered with them, were already really good at communication. Others were really good builders, and we had to coach and kind of work really hard on the customer service side, on reporting and building those systems behind the scenes that allowed them to communicate with us in a way that allowed us to then communicate to the customers. So yeah, and I guess peace of mind is one of the things that's almost paramount when you're doing anything, but certainly when you're investing a lot of your money and you have a game plan that you want to grow your wealth through investing in property. The more stress you have through any process, whether that's one build or multiple, more stress you have, the less likely you are to do it again. And yeah, and obviously we hate to see that stress turning people off. One quick anecdote on that. Years ago, I think it was back in 2006, I arranged some house and land packages, and I had secured about 17 blocks of land in an estate, which I thought were amazing value. Got the building design done, went to a builder, had them packaged. So I had a building contract, a land contract, and I went and got a valuation, and I took it to it was actually 17 of our first customers, or 16. So I bought one, and various other friends, and my wife also, my future wife bought one, my current wife now. Anyway, so she bought one with her mum, and I remember the first drawdown for the construction, she'd been at the bank and came home visibly upset. She'd had to go in there to submit the building claim and was just treated like junk. Like, I think she kind of felt like whoever she was talking to was making it like she didn't know what she was talking about, which might have been the case because she'd never done this before, but she didn't feel supported in that. And this was before OpenCorp had finance broking and I guess that extra level of support. But she was right off the process, and she said to me, I'm never doing this again. She eventually finished the house, and she ended up selling it, made $100,000 profit within, I think it was an 18-month period. She split the profits with her mum. And I remember saying at the end, so would you do that again? She said, oh, yes. But for 18 months, she was dead against ever investing in property again, and didn't want a bar of it. And that was something, and that obviously one of the reasons why we started the business was because we realized that there are so many people who have the potential to grow their wealth through property who get turned off because of experiences they have, whether it's with the banker they're dealing with, or the broker they're dealing with, the builder they dealt with, the property manager they dealt with. They're all things that add stress to a process that doesn't need to be stressful. I must admit, it's never been stressful for me, but I was kind of bought into property investing as a teenager when I didn't take it that seriously. I wanted to do it, but I wasn't scared of debt, and I wasn't scared of construction because I've been on enough building sites. But obviously, there's a lot of people who haven't. Now, I guess I'll bring that back to the first thing you also said in relation to that question, Nat, which was I think you mentioned that one of the customers who'd had the build finished, and it was after construction, something that was outside of the builder's warranty or the supplier's warranty, kind of went pear-shaped, and obviously we stepped in to help resolve that and ensure that the customer wasn't out of pocket. And that's something that we also see, that there are things that come up even with the best builders that are just almost freak occurrences, completely unexpected. There's stuff I see still after 21, 22 years now in property, that I still see things that I've never seen before, just pop up randomly and go, wow, I didn't know that was a thing that could happen. And sometimes that happens, rarely, but sometimes that happens on new houses. And it's things that maybe fall in a gap between the insurance policy or the builder's warranty or the supplier's warranty. And sometimes it can happen through weather events, storm, or just things that you may not have been able to factor in. And they're the things that have the potential to cost a lot of money. And again, that's, I guess, one of the things that makes me really proud, knowing that where those things occur, we're kind of there, standing behind our clients, helping them deal with it, get things back on track, and often helping financially to make sure that it's not something that sets those clients back in a way that would push them off the journey. So yeah, look, it's a minefield when you start thinking about engaging a builder yourself. Yeah, it's a lot of homework, I guess, if you want to go through that. Sorry, I've just got another question. I'm not quite sure for the 18,000 cost to hold an investment property the first year. I'll have to fork out that amount to hold it. I'm not quite following that question, because it certainly doesn't cost $18,000 a year to hold an investment property, and we'd expect there to be rent coming through. Obviously, you do have interest on the property, but we generally would look at the net income, as in when we look at cost to hold, it's the net of income minus expenses. We don't just look at the expenses and ignore the income. So yeah, I think, and generally I can say that a lot across the portfolio at the moment, particularly for new purchases, most properties are either cash flow positive or cash flow neutral or thereabouts, with the benefit of tax savings, with the benefit of low interest rates, and so on. I'm not sure if I missed anything. Matt, do you think I've kind of missed anything on that question, or would that?
No, I think
cover
it? Yeah, I think you covered it. Yeah.
Cool. 57 minutes. If there's any other questions, I'll let them come through in the next couple of minutes, but we might wrap it up very shortly. Again, Nat, it's been great to have you on, and yeah, I think hopefully we get invited back. Hopefully we've kept it interesting for everyone.
Yeah, that's it. Hopefully.
Yeah. Worst case scenario, we got to have a good chat.
That's it.
Yeah, thanks everyone for logging in today. Thanks for your questions. Hope we've answered them all fully, and yeah, look forward to our next Facebook Live Q&A.
Thanks everybody.